Well, good morning. Welcome to this weekly market report from the Ag Market Network, brought to you by FiberMax and Stoneville Seed. Exports have just come out. I have not actually looked at them yet. Net sales of 67,600, down 26% from the previous week, up noticeably over the 4-week average. Pakistan took 24,500. Vietnam took 23,300. Let's look for the I'm just continuing to look here. Malaysia took 12,300. Looking for cancellations. China canceled 7,000 bales. That's actually light considered what we have been seeing, so maybe the cancellations are about to end. Still looking at relatively light demand, but a positive number. Looking at net sales, new crop sales 45,900, led by China buying 22,000. Actual shipments of 113,000. Now the reaction of the market has been negative. We right now are we were up about 15 or 16 before the report. Right now we are down. We are actually up 2. So we backed off a little. Soybeans net sales of 470,400 metric tons, and that is up 47% from the previous week and 54% over the 4-week average. The Netherlands took 180,500 metric tons. Argentina took 114,900 metric tons. Japan took 100,900 metric tons. The soybean market before the report was down 1.5. Right now it's down 1.5. No change. Corn. The corn number, net sales 892,500, up 27% from the previous week and 95% over the 4-week average. Mexico took 334,800 metric tons. Japan took 207,200 metric tons. Saudi Arabia took 145,300 metric tons. The corn was down 1/4 cent before the report. Right now the corn is down the same thing. It's unchanged, down 1/4. Wheat net sales of 438,300 metric tons, down 34% from the previous week and 18% from the 4-week average. Bangladesh took 120,000 metric tons. Taiwan took 65,300 metric tons. Japan took 60,900 metric tons. Wheat before the report was down 1 3/4. Right now it's down 2. So I would say that the cotton number still continues to be what it's been, a slow number for business, but a positive number and less cancellations from China. So there is something to be seen from this that could be a little bit constructive, but the market is continuing to drift down at the moment. Let's take a look at some recent news here. We have been looking at the reaction of the market since our last crop report. The crop report showing a gigantic drop in production due to the hurricane in Georgia, and now from that number coming out, we made our high, and then we had a 445-point drop after that. Very confusing for a lot of people. I think it very clearly showed this market is more about demand than anything else, and until we can start picking up demand, we've got continued problems, at the very least rallying much. It could be we're going to continue to do what we've done for 2 months, which is trade in the trading range of 75 to 76 to the downside, 80 up to 82 to the upside. We're moving now to the most active month being March, and that I think was 76, maybe 76.5 up to 82. And I think that's just where we're going to live for a while. Now, the latest news coming out about the trade sanctions or possible trade agreement at the end of the month at the G20 are not good toward an actual agreement then. They're saying now, the administration, that they're not thinking there'll be an agreement, that there will be an agreement on a framework, and they will work on that afterwards. So they're not breaking off our talks, and that's positive, and I think that will keep us in a trading range. But they also were saying that the threat of more sanctions against the automobile industry will take effect in January. So they've pushed that down the road. So what to expect? Just what I mentioned, sideways market. If we get at some point in our lifetime, if we get a trade agreement, then we're going to see a sharply higher market. Been talking about that for forever. Soybeans, corn, and wheat. Seasonally, these markets should be at a time when they're starting to move up, and we've seen that. We still have hanging over the soybean market the same thing that's affecting the cotton market, which is the Chinese trade sanctions. This market's going to have a hard time doing a lot to the upside, although I don't see how it can't rally going sometime into the spring to get new crop soybeans up toward $10, or we're going to suffer a cutback in acres that I don't think the market wants. I don't know how they're going to figure that one out, but it's going to have to happen at some point, I believe. Upside potential for soybeans with a trade agreement, $10, and we think that could push corn to $4 to $4.20 and wheat up toward $5.40. But that's a lot of ifs here because you've just got to have things starting to happen that are positive to the market. And that's about it. Right now, cotton market is down 7 in March at 78.21. January soybeans down 2 1/4 at 886 1/2. December corn down 3/4 at 366 3/4. December wheat down 2 at 503 1/4. I think the markets are a little disappointed in the trade announcement, saying that that's not going to happen at this G20 meeting. But I also think that these markets are not shocked, and for that reason they're not really selling off much. So that's it. Have a good day. Thanks for being with us for this edition of our weekly market report brought to you by FiberMax and Stoneville Seed. We'll see you later.